say initializing anything up there? Oh, it says recording in the top. Excellent. Let's hope it works. Okay. So, problem 12.7. What I want to do is just show you how I'd go through a question. We're all different, right? So I'd kind of focus on each little part and then put it all together. So Brown Training Company, charitable organization, computer training, unemployed people. They have to apply 3-month session. If their application is accepted, they pay a $200 deposit. So right away, you guys are a business, or the organization, the not-for-profit. I come in, I pay you, you're going to hang on to it until I either complete it. If I drop out, you get to keep it. So up front, do you know who's going to quit? No. So is that revenue to you? No. What is it going to be? What kind of account? Unearned, which is a liability account. Okay? Excellent. Oh, you guys are right on the ball. Okay, so that is going to be unearned revenue, deferred revenue, something like that. You have a lot of different names. The deposit is refunded if you complete it, but it's forfeited, so will that be revenue to us? Yes. Excellent. Oh, by the way, this one isn't on your list of suggested problems. This one is actually one of your Connect problems. But there was a lot of confusion because you're new to this not-for-profit stuff and funding. So that's why I wanted to go over some of it. Okay, during operations, 90 individuals started, 50 completed, pretty good. Dropped out, 30 are still going. So the center receives most of its funding from the provincial government. Now, this is kind of an aside. For this course, you don't really, but when an organization is like that, it's like a governmental, not-for-profit. So technically, it's a governmental not-for-profit. So it actually follows PSA, or public standards. PSA handbook, section 4200. Now I'm throwing that kind of in just for information so that, you know, for CPA, the level of this understanding of not-for-profits is not a high level. Not like something like financial statements for a for-profit business. So the nice thing is section 4200 is very similar to the not-for-profit accounting standards, part 3 of the CPAC handbook. And that would be section 4400. Just so you know, and if you want to take a look at those things in the CPA handbook. Okay, well, let's keep going. So during the year, the government advanced $1 million to cover operating costs. So notice they're funding operating costs. Within 2 months of the year, and they have to provide a financial statement. Now that's very normal, not only from government financiers, but from any level of government, actually federal, municipal, or provincial. But also anyone else. If the United Way gives the money, that kind of stuff. So you're generally going to have to present financial statements. Sometimes it's their own format. So you just fill it out according to how they want it. So the government covers all operating costs. Now, sometimes you anticipate, we're going to have, $2 million of operating costs. So they'll give you $2 million. Turns out your operating costs weren't as high for whatever reason. So any surplus you put on to next year. So that wouldn't be revenue for this year. It would be unearned and for next year, or deferred. And if you're short, they will pay. Okay. Now, every grant or support comes with rules. So they said operating costs, but they want to be specific. Nothing to do with capital purchases. And any application fees forfeited would come off there. Okay? Everybody good? So whether you're working once you get out for the accounting firm, in which case you might be auditing not-for-profits, or you're working for a not-for-profit on your board, you're going to see all different kinds of grants coming through, and all of them have their own specific requirements. So as someone on a board, as the treasurer, you want to make sure the funds are being spent correctly, right? So you've got to understand the whole grant process. And it's always changing and always different. Okay. Now, a private company donated computers and office equipment with a fair value of $32,020. Now, the next two sentences, the center was to receive the donation, otherwise would have to raise money through other means to purchase these items. A lot of words there. The reason they tell you all those words is, can you record donation revenue if you wouldn't have been planning on buying it or using that service? No. That they're telling you there. If they don't tell you, you can pretty much assume if they say it was a donation that it's good. Capital assets were put into use April 1st, year 3. Have an estimated useful life of 3 years, and they use the straight line. You'll notice, you guys, in this course, throughout the whole thing, all the way to consolidations, we will keep using straight line. You can still, in reality, use double declining and stuff. It's just we're not focusing on that. So just stick with straight line. Now, tell me about this April 1st. If we're calculating amortization, what do we have to do? Can we do a whole year? Yeah, 9/12, right? So we've got a prorate 9/12 for amortization. Everybody good? Okay. So, here's some of the financial information. Now notice they say a part-time bookkeeper. Now usually when they say something like that, in the previous financial courses when you've been dealing with for-profit organizations, it's because they made a mistake or they did something wrong, you gotta fix it or whatever. In this section, they probably haven't done it how we do it, but the reality is, for many not-for-profits, I mean United Way, Lung Association, those are big. They've got people to do accounting in this organization. However, there are probably millions of small not-for-profits, from minor hockey to a small theater group to kinds. So a lot of times it'll be a part-time bookkeeper, or not even that, just some volunteer. And so their focus is cash in, cash out. That's good enough. So then either you as a board member or you as an accounting firm will generally have to kind of tidy it up and fix it the year. Okay, so they've got cash receipts, government grants, deposits, and total cash receipts. And they have cash expenditures underneath. And at the end of the year, following costs have been incurred but not paid. What are we going to do with those? Because some of this stuff in this chapter is way back to 311. So what entry would you make for those? as in their payables, right? Yeah. Perfect. And that'd be credit, and you debit expense, right? Okay. Sometimes it takes you guys a while to get some of those basic transactions down that once you know them, you go, oh, can't believe I forgot it. But so just watch for that. Okay. Executive Director of the Center has asked you for assistance because he knows or she knows you're great at accounting, and they're using the deferral method. So let's see what they want. Okay, briefly explain how the accrual basis of accounting is applied when accounting for capital assets, for not-for-profit. So, that was on the video. Not-for-profits, what do they do with their assets? Let's say they're bigger than 500,000. Capitalize and amortize. And you can't recognize the revenue from the asset until you match it to the expense. Okay, so it's backwards to the matching principle. Okay, so how about if they're smaller than 500,000 in average revenues? They have a choice, right? You can just expense them. You can capitalize, not amortize, or just capitalize and amortize. Everybody okay with that? Okay, now they want the statement of revenues and expenses for the year, and then they want the liability balances. So, let's go through and do these. So, part A, or part B rather, A you can look up on your own or whatever. We need revenues and expenses. So basically a statement of operations or an income statement. It doesn't matter what you're thinking of it now as. Okay. So, looking at this, let's just start here with the government grant, right? These are the things that came in. So, part one, we'll do the government grant received, or revenue. Okay, government grant revenue. So, now, it's not government grant money received, it's the revenue we've earned, right? And we match that to the expenses. So we need to look at our operating expenses. How much do we have in operating expenses? So that was here. And which ones are operating? I know it's probably hard for you to see. It's the first three: salaries and benefits, admin and supplies, rent and utilities. So those are operating. So let's put operating costs incurred. So we add the $620,000 from the salaries, the $220 from what the second one was, administration and supplies, and rent and utilities is $160. So that works out to $1 million. Now, I just want you to please note this matching this doesn't have to match. Okay, so don't rely on this, the money we received. Okay, they might have been short. They might have given us extra. So don't use that. Okay, so that's government grant revenue. Now, they're going to cover all our operating costs. Is there anything else then we should be adding on here? Yeah, which ones? The operating costs we've incurred but haven't paid. Because remember, we're doing accrual-based accounting. This is expenses in the right time period. They were incurred. Revenues match to expenses, basically. Okay, so we look on our other sheet. We see salaries and benefits were $8,000. And utilities were $6,000. So that's 14 that we get to add on there. Now, what about our capital purchase area amortization? Can we put it on there? Nope, because it has nothing to do with the government grant revenue, because that's only for operating. And is there anything else we have to subtract? Or anything we have to subtract? The amounts that were forfeited, because they don't belong with the operating grant. So we subtract 2,000, which is deposits forfeited. Now, where did I get that 2,000 from? Perfect. 10 people times 200 each. Excellent. Okay. Sorry, I should have used a different color. But that works out to government grant revenue of $1.012 million. Yes?
Have you paid for the second operating account?
Yes, we haven't paid yet, so yeah. Any questions? Okay, so that was our government revenue. Remember, we're calculating all the revenues. Now, is there any other revenue that I haven't written down yet? There's two. And I know it's hard if you don't have, yeah.
The deposits for this thing?
Deposits, and we're going to say the same thing, or?
The computers.
The what?
The computers.
Yes, the stuff from the computers. Okay, excellent. Let's start with the deposits. Perfect, you guys. The deposits forfeited. Our client quit, they left, we get to keep the $200. That is revenue. So deposits forfeited revenue, 2,000. It's already calculated above. Okay, now we've got to deal with the third thing, which was the computer equipment. Computer donation revenue. Now, they donated $320,000 worth of equipment. Can we record it all now? No, okay? The reason is users of the statement are going to look at it and go, wow, that year there was a huge donation, we should do this, that kind of stuff. Whereas we're saying, no, it's going to match the usage of the equipment. So computer donation revenue, we can't record the whole amount. Have to match the amount of revenue to the amortization expense. Okay, so we said we had $320,000 of equipment. It had a 3-year life, and it was April 1st, year 3, which is the year we're doing it for. So, tell me what you get for revenue. $80,000? Yes. That's exactly what you need to get. And it's the 320 over the 3-year life. Really basic stuff, you guys. You were doing this your first accounting course. Times 912. So now we would total up all the revenue. Oh wait, I forgot the deposits, right? Shouldn't the deposits be on here? Be brave. No, because they're liabilities. Yeah, they're earned. Excellent. So that works out to 1.094 million. Questions with that?
Just at the beginning, like when we were doing the operating costs incurred, is the reason why? Oh right, no, never mind. I answered my own question.
Oh, not you.
You just said you just. I was confused of why the deposits from the course participants didn't get added in. We just talked about that.
Okay. No, it's always good, you guys, to rethink it and reassert the reasons. It really helps your learning. Anyone still need this? Okay, so now we've expenses, so they're listed here, so hopefully we can keep it. So part A. Okay, so this is the easier part. That first part with the deposits, the forfeitures and stuff, that usually is what messes students up that I get emails about. But this part is pretty easy. So we've got salaries and benefits. And so that's, numbers are small, just the 620,000, right? No, you all know that. We got to add these on too. They're incurred. We didn't pay for. Don't care about that. It's accrual. So we're going to add 620 plus 8 is 628. Oh, yes, thank you. So the admin and supplies. Oh, yes.
Which section are you doing? Because A is just explanation.
Oh, B. Thank you. This is B. That other page should say B2. Oh, it does. Thank you. Okay, admin and supplies. Do we have any extra admin and supplies incurred? Nope. So it's 220, just like up at the top. Okay, rent and utilities. Again, I'm just going to pull this down a little. I'll try and keep that on there. We've got rent and utilities up here at some number that I can't see, 60, and utilities of 6. So of course we're going to add them together. Okay, we're pretty much done our expenses then, right? What am I missing? Starts with a D or an A? the amortization or depreciation. Perfect, you guys. So. Amortization expense. We already calculated it.